Yo, YouTube, you could be anywhere in this world, but you're right here with us. So thank you for joining us. I'm Chris. This is Dave. And I think the last 2 weeks, Dave has really highlighted our method. I know we don't like to say that we have a crystal ball or anything like that, but shit, our method and just the way that it's kind of elapsed the last couple of weeks. It's like if you're not making money, I don't know exactly what method you're using or what exactly you're doing. Like we like to say, Dave, that what separates a trader is anyone can enter a trade, right? But you have to have exits, and you have to have take profit set up. And I think the last couple weeks have kind of highlighted that.
Yeah, man. Yeah. So part of having process, method, a strategy is to ensure that you have edge, and that edge should allow you to have consistency over a large sample set of trades and over a long period of performance. And yeah, it's just amazing to see how the markets have treated us this entire month, these past couple of weeks, and since the start of this year. And that has nothing to do because, as Chris mentioned, it's not that we have a crystal ball. It's just that we have a method that has edge. And when you are able to adhere with like ruthless discipline to something that has that level of consistency, you're going to be making money like clockwork. So anyways, it's Chris and David and Chris, head traders here at Traders Creed. It's always an honor and a pleasure to spend this time with each and every single one of you. Before we begin the video, if you guys could just do us that favor of hitting that like button, subscribe button, and that notification bell button if you want to stay up to date with any of our videos. As Chris and I discussed last video, we will do our absolute best to get back into these analysis breakdowns and do more trainings, just so you understand a lot of the concepts that we're teaching, a lot of the foundations of what we want to articulate and get across to all of you. We hope that our information proves to be insightful, valuable, and helpful to help enhance your performance and your edge in the financial markets. Also, if you have any trading buddies or people that might be interested in trading, feel free to share our content, man. Either way, I think that everybody's going to have different perceptions, ideas, ways of trading, the way they approach the markets. But if what we're teaching helps you, it might be able to help somebody else. And that's all we're trying to do, is get the word out and try to bring the 90% of traders, as many of them as possible. Obviously, we can't do it all because some people, they're not going to get this, man. Trading is one of those things where you either get it or you don't. But today's schedule is pretty simple. We're going to do an analysis breakdown on the Euro USD, and we're going to do a little something as well. We're going to add to this little analysis breakdown by adding a quick little training. We said that we've been trying to do this, and we're going to get to it into this video. It's talking about entry criteria, the execution process of our method. Entries, exits, and targets, just so you guys have an idea and you could begin to trade or take our trades with a little bit more confidence and that level of consistency that we're talking about. So that's we're going to break down the Euro USD, what we expect and anticipate is likely to happen for this week. We do have a little bit of risk on sentiment coming into the market. So we believe that risk on currency pairs such as the pound, euro, Aussie, risk on currencies across the board are likely to appreciate in value for this upcoming week. And with that said, we want to look for long plays, man, long plays. And we're going to go ahead and break down a lot of the criteria that's given us a strong indication that upside is, on the balance of probability, the best bet that we could take. Also, then after that, once we do our breakdown, we're going to talk about the several different variations of our setups, because mind you, no setup looks exactly the same. I know this is where a lot of novice traders lose their shit, is that they think a technical setup looks like some pattern, and there's just no patterns in the markets, guys. There are recurring themes, but if you're sold on technical patterns, stuff like that, your journey is going to be very, very difficult as a trader, and you're just not going to be able to take trades or high quality trades because you're expecting it to look one way or another. The markets, we said it several times, they're very dynamic. There's a lot of ambiguity involved there. You are making decisions in the unknown. You have to be comfortable in the unknown. The market, Chris and I, we bang about this all the time. You can always be 100% wrong in the markets, but you can never be 100% right. So that just goes to show that there's, you got to tread in murky waters and you got to be comfortable with that. But as long as you have edge, you shouldn't worry about taking a loss here and there because you will make money over time. So that's what we got for today's video. It should be quick, short, and straight to the point. Let's talk about Euro USD, why we expect some upside continuation for the Euro. Let's go ahead and deploy our round numbers. We've discussed the significance of round numbers before. So you know why we're deploying the horizontal levels, where we're deploying them. We got one at the 117, next one, 118. All right, that should be good enough there. Let's go ahead and deploy our minor levels, midpoints. 1750, looks good right there. Go ahead and color code that or change the line if you need to, just so you can reference it very quickly. You know what its function is, what purpose it serves. And let's go ahead and deploy the rest of our tools, see if we can spot any trend lines, any breaks of structures, any trends that might still be intact or that might have been invalidated. A second here. Here we are, peeps. The precise that you can get it, the better. It's not a perfect art and science. Just bear that in mind. What else? What else do we got? What else do we got? We had this nice trending structure to the upside as well last week. Actually, the week before that, not last week, excuse me. There we go. That looks gorgeous. Now, last part, zones. We deploy our zones. Look for some obvious levels of structures, clear contact points. That way you can engage in a very thorough, in-depth order flow analysis. So the swing point looks very, very good. You guys can see the interactions right there. And every time that you engage in the financial markets on a new day, a new week, you need to be dynamic with all your tools. Clean up your charts and start deploying your tools again. If nothing much has changed, then nothing much has changed. But your zones are where it's gonna be a little bit more dynamic. So last week we had a zone right here. But more price action has unfolded and elapsed. So this zone isn't really that relevant to us anymore. I mean, sure, you can have it on your chart, but the more dynamic that you are with it, the more precise, the more accurate your analysis is going to be, and you can start to take your trades with more confidence. There we go. So that high point is interacting, or actually the price action that has just unfolded has interacted with last week's high point. So now we're going to start going through our filtering process, checklist. So we've talked about accumulations before in our basic training video. They happen at significant round numbers, key levels. We got a interaction here, fake out, breach, close back inside the 117, retest again, and then boom, off to the races. You got a dynamic break of structure right there. You got a very nice horizontal break of structure right here. Now we're cooking with something. Now we're starting to get the idea that maybe buyers are in control of the market, that we want to start looking for long plays. What's the next step of our method? Look for impulsive moves. This is giving you direction. Look at that massive bullish strength right there. So we know that we're going to start to look for long opportunities. Then we start to look for our confirmed range. The price behavior, the dynamics of price behavior are so predictable. There's nothing overly complex about this. Markets are going to move, then they're going to exhaust themselves and consolidate. And then we wait for these ranges to be created. That way we can start to engage in our order flow analysis. You can't really make intelligent decisions when the markets are moving, especially in this volatile fashion in lifetime. It's very difficult to do that. If anything, you're going to be stimulating. You're going to start chasing. Your entries are going to be subpar. You're not going to know where to place your stop orders. So remember, markets are going to move. They're going to exhaust themselves. Our edge comes when these markets exhaust themselves, because that's when we can really start to pick off some high quality trades. So 1-2 test at the highs. 1-2 test at the lows. We got a nice little range. There we go. We want to look for some long opportunities. Now, this is where the patience element comes into any trading approach. Like if you are not patient enough to wait for your trades or wait for your setup to come to you, you're not going to sustain yourself over the long term. So what can we anticipate is likely to unfold for the euro? Well, if we can get more interactions at this level of support, what we start to call the trap, meaning deceptive price action that is luring in buyers to enter at that obvious level of support. We know liquidity in the form of buy orders is going to, I guess you could say, fill underneath that level of support. There's no follow through. Buyers are not given the opportunity to exit for profit. If you were entering at this level of support, ask yourself, where would you likely take profit? You would take profit at the high point of this range, or you would hold your trade. Give me a second, guys, a little bit of technical difficulties. You would likely take your trade. Yeah, we're just going to deal with that at that high point, or you would hold it past that range. Then once we get that, we would wait for our setup.
And then if you ask yourself the same question, if you're looking at where those traders are targeting, you also have to ask yourself, where is their exit?
Exactly. So you have to ask, well, where are their stop orders, and where are they likely to take targets? So this is going to give you a much more in-depth idea of the decisions that these traders are making and where your opportunity is going to lie, and understanding that, okay, the trade that I'm taking makes sense. So before we get into the setups, entries, targets, and exits and things like that, you need to map out your liquidity. You need to map out where traders are still in profit from prior sessions, prior days, prior weeks, months, et cetera, et cetera. So we know sellers. Yeah, it's gonna give me a second, guys. I pardon the technical difficulties here. We know sellers are still in profit from this prior high point, this structure point. Why? Because it has yet to be invalidated. We also know there's a bulk of liquidity from sellers holding profitable trades at this high point as well. So now that you have that liquidity mapped out, now we know where the market is likely to move if it does move in our anticipated direction. So once again, we know sellers are still probably holding their stop orders here. They're probably at break even, things like that. All we know is that this is what we call liquidity zones, where there is that pool and that bulk of liquidity residing behind these structure points. We got another one right here. So if we are expecting bullish continuation, we'll know where to really target over a macro perspective. But on a shorter intraday perspective, this is what we're going to talk about. So I know that retail traders are just always looking for that next pattern, that next technical setup. All Cris and I can tell you is that from our years of experience, there is no such things as patterns in the market. As we just stated, there are recurring themes. You can exploit these recurring themes for profit, but the markets are way too dynamic for patterns. If there were real patterns in the markets, everybody would be fucking rich in the financial markets. Yet the BIS, the statistics haven't changed. 90% of traders are still losing money.
There's that massive. Be here, Dave, making a YouTube video showing you how, if it was that easy.
Yeah. Hey, we put our money where our mouth is, man. So before anyone calls us on bullshit, dude, we show you the pre-trade, we show you the live trade, and we show you the result, good or bad. We don't cherry pick our ideas. The only reason is that, there's a massive industry geared around patterns, strategies, courses, and stuff like that, is because it's easy for the average person to digest. Humans are patterned by nature. That's just how we're wired. So when people they're hawking these patterns at you, first of all, you need to understand they're just cherry picking the times that they work. They're not showing you the times that they go wrong, because if they did, you would see that there's no edge in that. If you do your fucking homework, you would realize that these like double bottom, these head and shoulders, they rarely have long-term consistency in them. So with that said, there's an industry geared around that because it's just easy. It's a visual. Traders like that. It's easy for them to understand. Like, oh, if I see this, then I do this. But the markets are more complex than that. But anyways, we're going to talk about our setups. However, there are several variations of the setup. All we care about, all Cris and I care about is, are we transacting at the best available price? Are we buying low? And are we selling high? So given all the criteria that we checked off, we got our break of structure, accumulation zone, impulse move. We know we want to buy. As buyers, given that our bias is longing the market, as buyers, we want to buy low so we can sell fucking high. In order for us to do that, we need to understand what traders are making decisions, where the bulk of liquidity is, and where we're going to get in at the best available price, along with the smart money hedge funds, big institutions, and things like that. So once we get our trap and we start to see that the price isn't really moving anywhere, it's hovering around that level of support, like, we'll know for certain that liquidity in the form of stop orders is building up underneath that structure point from buyers. So if that's the case, what we're going to be looking for is for a nice deep excursion underneath that level. Also, mind you, there's a nice little structure point right there. So with that said, there's going to be liquidity there. That's just a point of reference. I don't know if price will reach down there, but it is a possibility. It is underneath a minor level, so there is a probability that it could come down there. So if we get stopped out the first time, it's not the end of the world. We will continue to wait for a long setup if it presents itself. So if we get something like this where we refer our V stop, it's a nice clean little spike, there you go. Also, it can look like a double swipe, meaning you'll get that deep excursion. It'll come back, clean out that low, attract more sellers in the form of breakout traders, and then it'll breach, break, close above, pull back, retest, and then continue. Also, you could get a little double bottom, man. We see this all the time as well. A double bottom, that nice little break, you could take that. It could look like a little inverse head and shoulders. There's just so many ways that this can unfold. It's not how it unfolds that matters. It's how you react in lifetime as price is unfolding. So all we care about is once we see price underneath that structure point, Cris and I are going to be hyper focused, and we're going to start executing and deploying our orders. And Cris and I were very aggressive, man. As price is already unfolding in real time, you bet your ass we're going to be deploying orders. And then we'll give our stop order, which we'll get into in a little bit, some breathing room. That way we can give our trade the best possible odds of success and survival. So now that we discussed the several variations of our setups and criteria, now we're going to talk about exits. So this is the execution part. Setups, entries. Now let's talk about exits. So if you're conservative, you would generally wait for the setup to unfold and a breach back inside that level. If you get that, you can enter here and then place your stop order nice and tight underneath that structure point, and just write it out to the midpoint and then the high of the range, which would be your exits for targets. If you're aggressive like Cris and I, any selling pressure, any bearish price action that is unfolding underneath that level of structure is fair game to take along. And then we would give our stop order maybe about 10 to 15 pips breathing room. That way we give our trade the best odds of success. So right around there, you're getting about 10 pips. You can place that underneath that structure point, and then you should be able to let your trade ride out in case you get some pushback in the event that, or the setup is continuing to unfold. Yeah. So,
and because we're entering at bargain prices, Dave, our risk to reward is still there, even though we're giving it space to play out.
Exactly. So if you're being aggressive, you're taking the long as price action is unfolding, we highly advise that you give your stop order 8 to 15 pips of breathing room. That's going to be entirely up to you, man. But we know with the volatility in the euro, you can get away with a pretty tight stop order. If you're conservative and you're waiting for the setup to unfold, to give you more confirmations, whatever those confirmation filters could be for you, by all means, whatever makes you sleep at night. But yeah, once you get that confirmation, you generally want to place your stop order nice and tight, right? You want to nail it right underneath that structure point. But if you're entering as price action is unfolding, give it about 8 to 15 pips of breathing room. That way, if you do get some pushback, it's not going to swipe you out and you're still in the trade. So as Cris said, just to reiterate on that point, if we do enter pretty early, our risk reward is still there. So let's just say we take our first target at the midpoint. We place it right underneath there. You're getting about a 1.5. And then if you take it at the high, about a 1 to 2. Depending on how that looks, you know, you could tighten the stop order, you could be dynamic with it and things like that. But your risk reward will evolve during the trade. Just be aware of that. And even better, this is what we call milking the trade. So if we do get confirmation that price is moving in our favor, once we get a breach, pull back into that level, you can add to your trade if you want. What we generally advise a lot of our students to do is that if you're adding to your positions, so for example, we generally advise that you cut your risk controls in half. So if you're trading with about 2% of your equity or you're balancing your account, then when you're adding, you might want to trade 1%. You want to cut that in half so you're not over exposing yourself, because it's cool to milk an idea, but it's not cool when you're being really aggressive with it. And if things do go sour and they do go south, you don't take a big hit than was intended. So if we do get confirmation, we get that pullback and breach back inside there, I highly advise that you cut your risk controls in half, and then you can ride this trade even further. You can let this one run. So once you're entering here, I would break even. Once your midpoint target is made, you can add. And then, you know, as we get more price action to unfold, you get another range, confirmed range, a nice little stop hunt setup. You continue to ride it where the bulk of liquidity is. I would say right above this point, you're in, you're out completely for the week. And that's it, guys. You don't need to overcomplicate this stuff. You don't want to take it any further past those highs because you don't know what's going to unfold beyond those highs. At that point, you're treading on murky waters. If you want to let your balls hang on that, be my guest. But just stick to the process. You want to be in, you want to be out, take your money and wait for more setups to unfold, because they will present themselves, guys. Don't chase anything. So that's pretty much what we have in terms of variations of our setups, how you can play them, how you're going to take them, where to put your stop order, and where to exit for targets. Like we always exit at the midpoint of the range. This is subjective. It's not an exact science. Just wherever you feel is comfortable. Hell, it could be slightly higher than that. And then you're in, out, and this could happen within the day, 2 days, by the end of the week. And then, you know, if you're adding to your positions, you can look to target above these highs as well, around the 1.18 level. I think that's going to be a solid target area for us to maximize profit potential. So that's pretty much really it. There's nothing overly complex about execution. I think it's just something that we did have to go over and communicate to many of you, just so you know how we're taking this trades, how we're playing it, how these stop hunts will unfold. There are several variations of it. The point is that any breaches below that structure point is where we're going to be hyper focused, and we're going to be paying attention to see where we can take these trades. So I think that really concludes our trainings. We're expecting, just in summary and conclusion, we are expecting upside and risk on sentiment for a lot of these risk on currency pairs across the board. Look for long setups. Wait for the markets to consolidate, to exhaust themselves, so you can engage in a much more deeper order flow analysis. And then when you see your moment to act, execute with fearlessness and ruthlessness. And that's it, man. Be in, be out. Most of these trades, our setups are intraday setups, meaning we should be in and out within the day. Maybe 2-3 days at the most, and then we're generally flat by the end of the week. That's how we like to approach the markets as day traders. We don't like to hold and overexpose ourselves over the weekend. So I think that's pretty much it. Do you have anything to add to that, Chris? Anything that we should go over?
Only thing I kind of wanted to touch up on is the market never lacks any opportunities. So if you guys feel like you're missing out, there's no point to this. The market's going to be there tomorrow, and the day that it's not, like we used to say, Dave, it's the day that you're gonna have to strap up. So the good thing is the market's gonna be there. So like you're never gonna be shy of opportunities.
Yeah. So don't rush your problem. Don't chase moves. Just wait. The more patient you are, I guarantee you guys, this will pay massive dividends down the line, and it's gonna help your performance. It's gonna help your edge, and you're gonna make a lot of goddamn money in the process doing it. So that's it, man. The message of today is just focus on process, adhering to that process, managing your risk. You've seen several variations of our setup. Play them well, trade them well, and maybe over time you might mold this to your liking. All we can do is give you the foundations, the principles, and how we do things. But maybe over time, you might have a different way of approaching the markets. We just hope that what we're teaching you starts to help your performance and your edge throughout the days and the weeks. But that's pretty much the only opportunity that we spotted this week. It's just on the Euro USD. We will come back maybe Wednesday or Thursday to see how things unfolded. And we will try to do our best to present more opportunities to you guys if we spot them throughout the week. But for right now, Euro USD is the only thing that's looking good. Other than that, this has been nothing short of amazing. Let's go ahead and close this week strong. That pretty much wraps up this video. But anyways, go ahead and hit that like button, subscribe button, notification bell button. We would greatly appreciate any love and support. And yeah, well, we'll stay up to date with everything. But trade smart, trade safe, trade well. Most importantly, have fun with this. Let's kill this week, and we will see you guys next time.
Have a good one, guys.